Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Teamlease, whether it will be a multi-bagger or not, or whether you should invest in the company or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Teamlease International, here's a small request that kindly support me on Patreon. Once you do that, it will help you take out important questions from me. You can ask me questions on a daily basis. It will help me grow the channel here on YouTube. And once you take the $10 membership, you will have access to my portfolio, access to updates to my portfolio, a number of articles, a number of podcasts. Every day I try to put up a podcast on markets, and also you have an access to my watch list, which stocks I'm looking at and may buy later on. For detailed market or company talk, you can directly contact me through email if you have a portfolio or a number of stocks that need to be analyzed. Now about Teamlease International. Established in 2002, they provide hiring and job services across India. They have more than 3,000 employees on board and also has a vocational university in Gujarat. The market cap of the company is around 3,000 crores, and they provide a number of services like temporary staffing, IT staffing, payroll processing, regulatory compliance like taxes, etc., or anything with relation to hiring practices in different industries. So they have a gamut of products in front of them, not just hiring employees at lower, middle, and higher, you can say, bandwidth, but also into regulatory frameworks as well. If you look at the financials, and the Q4 numbers were out recently, and so they did okay-ish on the sales front, a 12% growth, but the profit dipped sharply due to some exceptionals and higher expenses as well. The debt is extremely low. There's high combined institution promoter holding. There's only 4% free float, and that is extremely positive for a company like Teamlease. I cannot calculate the return ratios or margins because the numbers were in negative. But before this, say in FY 17 and 18, they were doing good, positive 20% margins. If you look at the performance of the stock, then the stock has halved in the last 2 years. So it was doing pretty well, say in 2018 or later part of 2018. But after that, there has been a significant decline, and more decline came in post the February, you can say, that pandemic fall that we had. And this stock did not recover that much from that fall, particularly because of the current circumstances. So hiring is at the lowest level at the moment because companies are retrenching rather than hiring. They are more looking to cut down on their cost and cut down on their number of employees rather than hiring more, because they don't have money to pay the salaries itself. So these companies which are into hiring, which are into you can say HR practices, they would be hurt the most, and hence we have seen the numbers in the March, and we could see worse numbers in the June quarter, and that is why the fall has been extremely sharp. So numbers have remained mixed, although till 2018 FY18 numbers were good. Although before this return ratios were fine, I believe that the next 2 quarters could be difficult, and I still believe that if one is looking to buy this, you need to be a little bit patient. I don't know about the stock has declined sharply, so there could be a recovery, but as far as business is concerned, I think till December it looks extremely difficult that these sort of businesses would do well. Hiring will only begin in earnest once things normalize here in India, and we have seen how the situation is on the ground, and it is escalating at the moment. So we have to be careful with such kind of businesses which are related to economy. This is clear direct relation with economy, because if economy does well, only then the hiring practices will go up, and only then these companies will do well. Although the business per se is very efficient, the business per se does not require a lot of capital investment, etc., and that is why the business is good, but currently the cycle of the business is in turmoil. So if you are looking to buy, you can do it over a period. If you have a long term that is a 5 6 year time horizon. For the next 6 to 8 months it looks difficult. It is a debt free company, but there is a percent point to pledging, so that is there, but that's not huge. But that just to tell you, and consolidation is taking place currently in the stock. That is what I feel. There could be a downward move, I'm not ruling that out, but currently the stock has fallen a lot. So what lies ahead? Recruitment and hiring agencies should gain more business. So that is my assessment post the pandemic, probably in FY22 onwards or second half of FY21, things would get normal. So I believe that there will be a pent up demand for hiring that would take place later on, because the demand for products will increase, especially in the consumption domain, consumer discretionary and consumer durable domain. But jobs have to be available for them to flourish. So that is what I'm saying, that jobs will be available only when the market and the economy really does well. So you have to be careful buying now, there could be a downside attached. There is competition in this space, there are many unlisted players, there are many unorganized, unorganized market for hiring, especially for places like the Middle East, is huge. And I have seen that myself in New Delhi, in other parts of India, in southern part of India. We have a lot of agencies which hire for abroad, which hire for particular, you can say, businesses, and they are into that, and they are into that big time. So these listed companies will keep on facing that same pressure even later on. So the competition is huge. But again, if you look at a 6 7 10 year time horizon, this is a growth stock. This will grow once Indian economy keeps on growing. This is a very tumultuous period for such companies, because the growth rate is around 4% or so. Once even that goes up to 5 5.5%, these companies will bring in a lot of money for the investors. So things could be tough for the next 6 months, as I explained, but from March April 21 onwards, this could do better. Valuations is expensive, and that is why I'm apprehensive buying at current levels. 70 times earnings is extremely expensive for a business that may not produce very good results for the next 2 quarters. As I said, unlisted players has the biggest market share. So there are many unlisted companies which have bigger market share than Teamlease itself. So what needs to be done? In my opinion, you can buy only on major declines. If the stock falls to around say 20 to 30% from these levels, you can keep accumulating. Keep track of numbers, but again, do not expect anything big at least till December, January. So that is my opinion. But if you have a good 5 year, 4 5 year time horizon, these are good levels to buy. But for the next 1 year, do not expect a very good return in the stock. So this was a video on Teamlease. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.